Good afternoon. Welcome to Midcap Radar. I'm Sonal Putra. With me, as always, is Vivek Iyer. It's been a very range-bound market. We did see some recovery from the lows, a little bit selling off from those levels as well. So it's going to be very volatile.
Very volatile. VIX is where, it's at a multi-year high, and that's where all the worry is. Some positive news for today. Last hour, expect the MSCI flows to kick in. So almost $2 billion there. So that's the good news. FI flows finally will abate, at least for a session. But lots lined up on this show. Lots of management, nearing the fag end of the earnings season as well. First up, let's start off with the headlines. Stocks trade ranged ahead of the weekend and the Lok Sabha poll results next week. Realty and metals notch up some gains, even as healthcare and IT slip. Mid-caps are the relative underperformers.
Wellspin Corp reports weak quarter four earnings. Margin contract to 7.4% from 10% in the same period last year. The company's guidance remains muted, with revenue growth expected to be flat in FY25, stock down over 8%.
Ipca Labs extends losses on below than expected Q4, but the outlook for FY25 looks promising. The company expects revenue growth of 11% against 6% reported this year. Brokerages maintain a positive stance.
Rising competitive intensity for Zomato makes brokerage firm Macquarie bearish on the stock, sees downside to consensus forecast and margin for Blinkit with the entry of JioMart's 30-minute grocery delivery.
Muthoot Finance's Q4 earnings beat estimates, healthy growth of 20% in assets under management led by a surge in gold prices. Brokerages Morgan Stanley and CLSA raised their target prices and expect strong loan growth in FY25.
Okay, all right, those are the top headlines. And of course, we'll get some managements on the show as well, especially Wellspin Corp after that big fall that we've seen on the stock today. For the markets, Nifty is up around 60-odd points right now. The mid-caps, which were in the red for a larger part of the trading session, they have also recovered 74 points higher there. But the advanced decline ratio is in the favor of declines as we speak. And even the Bank Nifty has recovered from the lows of the day, 241 points higher right now. And, Vivek, you mentioned fag end of the earnings season. It's the end of earnings season now. So the next trigger, of course, would be 4th of June, where we have the election results. It's the first day of the new series, and it has turned out to be quite volatile so far.
Quite volatile so far. Monday, we'll get the exit poll results as well, and that's also something that the markets will get. It'll be interesting to see, how the positioning is. FI positioning heavily short. Be interesting to see, whether that turns today evening and as on Monday. But this is Midcap Radar, and this is our special segment, Midcap Movers, where Pharma has been looking at the screen, especially in the broader end of the markets, to take us through the mid-caps that are moving around. Pharma, over to you.
Well, it's not been a week to remember for sure for the markets, but they will look to end on a high considering the MSCI flows that would come in towards the close of trade. We'll start off with the gainers first, since the advanced decline is almost on an even keel, and five-star business finance has suddenly sprung up as the top gainer there on the small cap index, 7.5% higher in today's session and near the highest point of the day. PB Fintech is having a good day as well, 5% higher there. GMR Airports recovering some of the losses it saw yesterday. Data patterns and Torrent Power off the highs of the day is Torrent Power, but having a good day nonetheless. Some more stocks that are moving, and as you said, earnings season is over, but there are some earnings reactions that we still want to talk about. Ipca Labs is down 6.5% despite some positive management commentary there. Swan Energy there and a 5% lower circuit. Praj Industries has had a good day. Wellspin Corp, we'll hear from the management soon, but down 8% as of now after the earnings announcement. A sector that has done well is real estate, and that is seeing a bit of a bounce back in today's trading session. Remember, real estate has been leading the losses in the broader markets this week. Brigade Enterprises, Prestige, almost all sectoral components are doing well in today's trading session. Stocks that are doing well on the back of volumes, and they will come up on your screen now. And Bikaji Foods is having a very good day today. Remember, I guess people are snacking up ahead of the exit polls. 9% higher there. Vardhaman Textiles, Jindal Stainless, Deepak Fertilizers, all of them gaining on heavy volumes. And lastly, stocks that are trading lower in today's session, aside of the earnings reaction. Zomato, as you just highlighted after the brokerage commentary there, 3.5% lower. Page Industries is not having a very good day, almost 5% lower now. Mazgaon Dock seeing some profit booking, as is Linde India. Back to you.
Okay, it's been a one-way move for Linde India anyway, so there is some profit taking which was expected. But thank you so much, Harmas, for joining us as always and giving us a list of the stocks in the broader market. So taking one stock from there, and that's Welspun Corp. It is in focus on the back of quarter 4 numbers. Margin contracted both yearly and sequentially, while the net profit grew 20%, aided by lower finance costs and taxes, and also by higher other income. Vipul Mathur, the managing director and CEO of the company, is joining us now to explain what led to this fall in margins and what is the outlook going forward as well. Mr. Mathur, good afternoon. Thank you so much for joining us today. The street is disappointed with the margin fall that has come by. Can you explain what led to this margin fall? Were there any one-offs in this particular quarter?
Very good afternoon. And it catches everyone by surprise when market reacts like this. But nevertheless, if you look at the Welspun Corp earning, I think so it has been a sort of a historic performance. It has, from in terms of its revenue and in terms of its EBITDA and in terms of ROCE, I think so. If you see the FY24 number, it has been one of the best performance or the best performance ever given by Welspun Corp. Quarter 4 has been a little muted, and as I said, see, we are into a project business. Number one, the quarter earnings depend on the product mix what we have. So in some quarters you have a nice blend of orders, and some quarters you have a little lesser margin blend of orders. I think so that gets impacted on a quarter-on-quarter basis. But as I have always said, that this is a company to be looked on, on a year-on-year basis. And if you look at our FY24 performance, I think so it has been a very spectacular performance.
Okay, if you could give us the sense of why the margins were impacted in Q4, and does that rebound as far as the first quarter of FY25 is concerned?
See, the margins in FY24 primarily was impacted because of the blend, as I said. The type of orders, the blend of orders, what we were executing in FY24, in the fourth quarter of FY24, were primarily the more water orders, and it has a little less blend of oil and gas, number one. Number two, our US business also we had taken a sort of a capital maintenance shutdown there for 1 month before we restart for a major order out there. So these two things put together, I think so this it's a one-off impact in a quarter 4. I think so if you see from an order book perspective, if you see from the growth, all the geographies where we are present and what type of order books what we have and what type of momentum we are seeing across all the geographies, I think so this is we are going to recover from this. So it is a sort of a one-off, I would like to say that.
Okay, so you call it a one-off, but the other thing that the street is worried about, Mr. Mathur, is that since you're so confident, you're still talking about revenues of 17,000 crore rupees in FY25, which is actually a slight dip if we say on a YY basis.
Sorry, I lost your voice, please.
The other thing that the street is a little worried about is the guidance for FY25. 17,000 crore rupees of revenues and 1,700 crore rupees in terms of EBITDA. This is actually slightly lower than revenues that you did in FY24. Can you explain the reason? Are you just being a little conservative, or is the market challenging?
No. If you see, we jumped from 10,000 crore rupees revenue to 17,000 crore rupees from FY23 to FY24. If you see, we jumped from an EBITDA of 800 crore rupees to 1,800 crore rupees EBITDA. Or, when we gave the guidance, we gave a guidance of 15,000 crore rupees and 1,500 crore rupees EBITDA. Right? As you get into the year, there are things which keeps on changing. It's a dynamic world. It keeps on changing. And, what we promise, we deliver. So at this point in time, at the start of the year, we have given a guidance. I think so we are seeing robustness across all our businesses. And I'm sure that, it is only going to be improving from here and not going down. So it's a mere guidance what we have given. It doesn't mean that, it has no potential to get improved upon from here. And FY24 results are a testimony to that.
So you are saying that there is a possibility you will be able to surpass this guidance. I'm asking again because while you're saying everything is robust, demand is looking good, quarter 4 was led by some one-offs, the US business shutdown and the product mix change. If that improves, will it not improve revenues? Despite the fact that 17,000 crore rupees you're saying is a record number, will you not grow on that in FY25?
See, it may. It may grow. There's no doubt about it. The margins will improve. I am very confident of that. One thing is very important is the play of our US business has to come in, and it is going to come back in the third quarter. It is going to come back there, and that is where you would see even the revenue started going up. So the impact of that you will see in quarter 1 or quarter 2 of the next years. But in terms of margins are definitely going to improve as what we have committed at or what we have indicated at this point.
Mr. Mathur, one question. You spoke about the US business. There seems to be a little bit of lack of clarity currently as far as the carbon capture project. So is that the project that you're saying will come on stream as far as Q3 or Q4 of FY25 is concerned? There has been no update. You said that there had been a delay in the order for 6 months, but I think the last couple of years there hasn't been an update on that.
No, carbon capture project is under repair. So that I'm not talking about that particular project. I'm talking about.
Could you give some clarity on that particular project itself?
Yeah, so that project is under hold at this point in time. There are land acquisitions issues which are there with the E&P company which is going to do that. And we have already notified that there is a suspension which is now in place, and so it is not going to happen. Let's be clear that whether this project is going to happen at this point in time, the answer is no. But what I am banking on is the Permians. As I said, Permian is the mainstay of US LNG exports. We have been one of the largest players in the Permian Basin. Out of the 4 or 5 pipelines, what has happened there in the Permian Basin, the gas coming to the Gulf Coast, we have supplied, more than 2/3 of those pipelines. And we have just concluded on 31st of March this year, we have just concluded a large order from the Permian. And now there are another pipelines which is under discussion. Those pipelines will happen, sometimes in the third quarter, end of second quarter, start of third quarter.
What would the size? Mr. Mathur, what would the size of this particular contract or the project be, the Permian project?
It would be almost similar, if not more. Similar to the last one. These Permian pipelines are almost close to 350, 400,000 tons of business. And if you see, historically, we have been doing that on a year-on-year basis. So it's a sort of a momentary blip which has come in. Whereby when I say blip, it doesn't mean that we do not have a business. We are still booked till Q3 of this year. So there is a business continuity. What we are talking about here is the business beyond Q3. And I am more than confident that, this Permian business is going to come up, is going to get finalized. And we are one of the largest player, one of the most, in the pole position. And I am sure we will definitely be in contention there. And we are actually.
Okay.
Good to hear that, sir. So give us a sense of the visibility as far as the DI pipes segment in Middle East is concerned. We understand that you're expanding there with a capex of close to 500 crores in the next couple of years. This is, we understand, in competition to Jindal Store, who's an established player there already. When will your facility come online in the next couple of years? Can we expect to see some revenues from there?
So we have just announced that. I think so it will take at least 18 months for us before we come absolutely online. I think so the market is a very mature market. The market is quite significant. I think so it has a play for every player at this point in time. We did a complete due diligence, and we definitely see that there is a gap for one potential player to come up and put in there, and that is what we have done. And I am very sure that this investment is going to be a very, very productive investment once it comes on stream. It's a very, very due diligence we have done it, and it's a very, very promising market. We all know that.
Okay, all right. Mr. Mathur, let's talk about how much did Sensex also contribute. It has seen a strong growth in FY24. Revenues have grown by 23% on a YY basis. What is the trajectory for next few years? What would the revenue margins and capex in this particular business look like?
So Sensex is absolutely, if you see, we have just been in 1 year into the business, and they have been doing exceedingly well. They did a top line of almost 635, 23% Y-on-Y margin. I think so they're absolutely on track, number one. It has a strong brand record. It has, we are rejuvenating this dealers and the distribution network. There's an extensive work which is being done at this point in time, and we are seeing the results of that coming in. As regards the capex, we have already announced that we will be doing a capex of almost 2,300 crore rupees into this entity, and that capex will be spread over next 2 years' time. And this capex is primarily across all the pipe segments and also a bit on the water segment side of it, the tank segment side of it. And those facilities will start coming on stream maybe at the end of this year or the early next year, and then we will start seeing their contribution into our EBITDA market. Just to remind.
So just one question. You spoke about capex. Could you give us your outlook on debt, and also if you could quantify by the end of FY25, how do you see your order book shape up? In the call you did mention that you're expecting 2 to 3 large orders. Could you quantify the order inflow, the end of FY25, what will be the order book, and how do you see debt trend?
So just to answer the order inflow, let's talk of US. I think so. We are, as I said, we have an confirmed order book of Q3, and then we are banking on this new Permian order, and in which we are a pole position. And I have no doubt whatsoever that we would be the selected one there. Number one. Number two, when we come to, let's say, Saudi. Our Saudi business, we are the largest, we are the controlling interest there, we are in the driving seat there, and at this point in time we have almost 2 years of a confirmed order book. So that entity is completely booked for 2 years, and the Saudi market is growing significantly. We all know of that, and that is why we are also investing into DIPs and all that stuff. Now let's come to India. I think so. In India we have almost an order book of 500,000 tons at this point in time. And it's a project business. We are at this point in time bidding for various international and domestic projects, both in oil and gas and water. But we already have a head start of close to 500,000 tons. It will only go from here. Now let's talk of DIP. Now DIP is, in India DIP, which is currently operational. We did almost 200,000 tons of DIP. In the very first year of our operation, we delivered 200,000 tons. And we expect to, and this year, we expect to reach almost 70 to 75, 80% of our capacity utilization. So I think we are not deprived of order, number one. The market across all the segments are saying, we are seeing a tailwind. And I'm sure if we do things correctly as what we are intending to do, I am sure order is not going to stand in our way.
Okay. And sir, the outlook on debt?
As regards debt, I think so. We started FY23 with a debt of 1,138 crore rupees, the net debt. You see, we have been able to bring it down to 300 or some 80 odd crore rupees. We have been able to do that for two reasons. Number one, the financial prudence, and all the businesses have been generating sufficient cash flows. So we have been able to maintain that. Now, even with the capex, what we intend to do over the next 2 years, all our businesses are free cash flow businesses. They will generate sufficient cash flow. So it is not going to create any sort of a debt pressure onto my balance sheet. Broadly, what we are looking is at a debt to EBITDA ratio, maybe less than half a percent.
Okay.
Right, sir. Right, sir. Thank you so much, sir. We've run out of time for this particular interview, but we'll get you once again very soon, as a lot of those orders do come in. Let's now slip into a short break. When we return, we will be joined by the management of Crystal Integrated Services to discuss the quarter gone by. Stay tuned. Welcome back to Midcap Radar. Facilities management services company Crystal Integrated Services reported a strong top-line growth of 52% in Q4. Net profit also grew 69% on a yearly basis. Sanjay Dighe, the CEO and whole-time director, is joining us now to discuss further. Good afternoon, Mr. Dighe. Thank you so much for joining us for this particular interview. First up, give us a sense. Q4, growth has been exceptional, almost 52%. FY24, it's been a 45% growth. Is this sustainable going into FY25? What is it that you're penciling in for FY25? Should we moderate our expectations?
Good afternoon to you. Thank you, first of all, for having me here. It's always a pleasure to speak with you. We've done very well in our Q4 results and also the quarter-ending numbers. Yes, this is our trend. We've already said that we are very much in our zone that we have been talking about in terms of our top line as well as our EBITDA margins. So I'm not surprised with these numbers. This is ideally the zone that we will operate on. And going forward also, we will have such numbers continuing as the quarter progresses.
Okay, so you'll continue to grow in that high double digit, or I would say around 50% is what you grew in Q4. What about margins, Mr. Dighe? Because in FY24, margins declined by 30 basis points to 6.7%. What kind of margin trajectory are you looking at in FY25? Would it also be led by change in your product mix? Which out of the three segments has the highest margins for you?
That's a good question. The margin profile, as I said, will remain the same. And product mix of our IFMS and staffing services, security services, and the catering also more or less remains in that zone. But of late in the last quarter also, or in the second half of the last year, we had good organic growth coming in our staffing segment. So I think that segment has grown. But answering your question about the margin profile, IFMS always has a better margin profile because it is bundled services, and then it is followed by the staffing and the staffing services. So we plan to acquire good businesses in the IFMS domain nationally. We are having good pipeline on which the sales team is working, and we are very confident to move ahead in our IFMS space as well. Not letting the security services remain in that 10% kind of a zone. We are expecting to grow that segment also very properly. We have a focus there. And on a national level, there is a lot of activities and new establishments coming up where security services are required. So we are very focused on that as well. So all these four segments, we have independent focus and we aspire to grow them.
Mr. DK, if you could give us a sense of sensitivity analysis as far as the entire revenue mix is concerned. Facility management FY21 was 70%, now come down to 54%. Staffing has gone up from 15% to almost 31%. So you're saying that the revenue mix is improving. FY25 end, what will be the revenue mix amongst these four segments that you're present in? And also, does the staffing segment enjoy higher margins?
Okay, so there are a couple of questions in one question that you have asked me. The staffing, in terms of profit margins, IFMS continues to have a better margin profile. Staffing services follows. It all depends on how your contracts are structured. The contracts that we are also aspiring and we focus on are margin based. So it is a margin based contract in terms of management fees. So we are able to extract good margin in our staffing business also. And also a very significant quantum of our staffing business currently comes from our government customer. So there the profile is a little better definitely from a corporate staffing business. So overall, if you ask me, continuing in the next quarters also that we have a great pipeline. We are very soon we will be acquiring good businesses also. And also there is kind of sunny side up. There are a lot of companies in India and abroad who have technology in our domain, who have different products that they are also after listing, they are eyeing us. A lot of people are meeting us to see how we can use their products in our services, whether it is IFMS or in bundled services. Now we are having good discussions with them. So if everything works well, then our margin profile will definitely be better.
Okay. So I'll come to that margin question in just a bit. You mentioned government contracts coming in, especially for staffing. What is it as a percentage of your overall order book or revenue contribution right now? Have you made progress to reduce reliance and improve private sector work? Because it was around 76% during the IPO time.
Yeah, generally the revenue mix is 70-30. That has been how it is traditionally. But as you also would know, the government business comes in higher volumes than the corporate business. So if you acquire one particular government contract, then all of a sudden that 70 would surge to 76, the way that it has happened during our listing. But that doesn't mean that we are not going to be focused on the corporate. We are absolutely focused on the corporate. We have revamped our team on national basis to come and have this margin profile. Aspiration is to keep it 70-30, which is a general aspiration. But we are not sad if it is 76 because it adds to our margin, it adds to our revenue. Also, a government business adds to a complete 3 years of pipeline. So it is a good thing. But at the same time, our aspiration is to maintain it into this 70 to 75 and 30 to kind of.
70. All right.
Yeah.
Okay, Mr. Digge, thank you so much for joining us today and speaking with us. So that's the word coming in from Crystal Integrated Services. Strong end to FY24. They expect the momentum to continue in FY25 as well. But quickly taking a look at the markets, Nifty has seen a massive recovery from the lows. 110 points higher on the Nifty right now. Mid-caps are supporting that as well. And Bank Nifty is the one which you should keep on your radar because it's outperforming the markets right now. The benchmarks, that is 0.7% higher there. So it's an all-round recovery that the markets are seeing right now. We'll slip into a break now. When we come back, we'll get you more on the markets and stock-specific action. Welcome back. You're still tuned into Midcap Radar, and markets is all we should talk about right now because there's been a lot of recovery. Look at Nifty CPSE index. That is the one which is surging as well. We spoke about the banking index, of course, supporting the benchmarks, but a lot of these PSU names are surging right now. Case in point, something. Yes, there you go. It is at the day's high right now. Something like a BPCL is doing well. Punjab National Bank is high right now. PFC, RFC, all of them, REC, all of them are at the day's high. So watch out for that one. There's been a big surge from the lows of the day in a lot of these PSU names as well. So ahead of the big event, a lot of these stocks anticipating and actually going ahead with those high.
The remarkable recovery. PSC, REC, these stocks were completely down in the dumps just a couple of hours ago. Even some of the pharma names, names like Dr. Reddy, Aurobindo, they seem to have rebounded quite a little bit. But that's all the time we have on this edition of Midcap Radar. As the market recovers quite significantly, we'll slip into a short break. Your stocks when we return.